Disclaimers: the channel's content is for educational and entertainment purposes only and should not be considered financial advice. It warns that investments involve risks, and past performance doesn't guarantee future results. It advises consulting a qualified financial professional before making investment decisions, and you agree to make such decisions at your own risk by watching.
Welcome back to another episode of Monthly Mint. I haven't done a video in a little bit because of the Christmas holidays, New Year's, and work got in the way. But now that I'm back, it's a new year. I'm going to show you what I've done and updated to my portfolio. There's been one big change that I've done recently, and that is because MSTE from Strategy, it is a Bitcoin proxy. It has dropped significantly, so I'm taking advantage of this moment right now. Now, I know a lot of you are scared and think that it's going to go to zero, but my own opinion, I think this is near the bottom or pretty close to it. So I think this is a great buying opportunity for myself. So what I did is I used $100,000 on margin, and the borrowing rate on the margin account right now is 3.95%. So that's roughly $332 each month that I'm going to be owing as interest on the $100,000 margin loan. Now, my strategy behind this is very simple. You can see here that the Harvest MicroStrategy Enhanced High Income Shares ETF is sitting at $4.58. You can see I clicked on the max and the chart started off really good and then it just plummeted. So let's compare this to the underlying ticker, MSTR strategy. Now you can see here on the 1-day comparison chart that it is tracking reasonably very close. We go to the 5-day, also the same, 1 month, 6 month. You can see here that it is underperforming, obviously, because it's covered call with a little bit of leverage. And we don't have the full picture here because the data for 1 year isn't quite the same as MSTE, but you can see that it is tracking MSTR. So here's what I did with MSTE. I can see that the chart has dropped significantly. So what I did is I made one big lump sum purchase. And I have a strategy behind this. So you can see right here, my cost basis, I put down $106,172. That bought me one lump sum of $22,322. Yes, it is dropping a little bit still, but it is mostly a volatile ticker. So this stock is going to go up and down drastically. Now you can see right here that the dividends have been dropping ever since the fund was initiated. Right now we're sitting at 20 cents per share. So here's my logic behind what I'm doing. So if we take my shares of 22,322 and you times that by 0.20, which is 20 cents per share, that comes out to a distribution or dividend of $4,446. Now my rationale behind this is I believe that I'm buying in near the bottom of the MSTR stock. So that means MSTE is going to be near the bottom as well. So doing one lump sum at this price, in my opinion, is a great strategy because when the stock starts going back up in price, that means I'm going to be making more when distributions are increasing and I get more shares at a lower cost. So for fun, let's look at what I'm going to be getting if and when MSTR goes back to its all-time highs. And I think I might because Bitcoin will go up over time. So let's say, hypothetically, it goes back to 66 cents distribution per share. So my purchase at $100 and some thousand with 22,232 shares times 66 cents comes out to $14,673. So if this bet works out the way I'm thinking it will, then I'm getting in at a very cheap price, and I'm going to be getting the appreciation of the stock or the NAV. Also, the distributions, I'll be getting larger distributions. Then I can disperse that income into other ETFs that I'm holding. Now, here's the kicker. When MSTE doubles or just over doubles, that means I'm going to sell half my shares, which will pay off the full amount of my debt. And I will be keeping the rest as income. So basically, if this works out the way I think it will, I will be getting $100,000 for free. while paying very small amount under $400 in interest each month. Now, if this doesn't work out in my favor because this is just an experiment, I do have an extra $100,000 set aside that I can pay off the margin loan if needed, but I don't think I'll be going that direction. Harvest has done a great job managing their funds, and this is an actively managed fund. Now, you can see here that by doing what I've done, adding on top of the strategy that I've already had in 2025, my annual income is now $130,270.05 annually. That comes out to $10,855.84 each month. That money will be split equally except for MSTE. I will distribute all those dividends equally into each ETF that I hold. By doing this strategy, I am increasing my income each month and waiting for MSTR to recover its all-time highs. Sure, this might take a long time, but I believe it will recover, and while I'm waiting, I'm getting paid distributions and increasing my income by distributing it throughout my ETFs. And when that time comes that it doubles, my margin will be 100% paid off while keeping my MST position. So I should have roughly 10 to 11,000 shares of MSTE after I've sold and paid off my margin. Now, this is just a fun experiment that I'm doing for myself, so please do not follow, as this is just entertainment, and you have to do your own homework. Obviously, do your own research. I'll see you in the next video.